Hi friends, Semiconductors just had one of their worst week in months. Nvidia down, AMD down nearly 6%, ARM almost 9% in a single session. Honestly, I've been waiting for this because I have a list of 12 AI stocks that I've been wanting to buy, and this week just gave me the entry point I needed. Let me show you how. Before we get into the stocks, some quick context. I think a lot of people are misreading this sell-off. Semiconductors ran nearly 70% this year before pulling back. A 4% correction after that kind of run isn't a warning sign, it's just a market catching its breath. The price went down, which for a long-time investors means one thing: you get to buy something good for less than you could last week. I've grouped my 12 stocks into 3 buckets based on how they behave when markets get rough. The first bucket, I call this the foundations: Nvidia, Broadcom, TSMC, ASML. These are the companies physically building the infrastructure of AI, irreplaceable in the supply chain. Second bucket, the efficiency plays: AMD, Qualcomm, Texas Instruments, Micron. Lower volatility, stronger cash flow, essential to how AI actually runs the real world. Third bucket, the growth anchors: ANET, Lam Research, Arista Networks, Marvel. These are the peaks and shows. Hyperscalers cannot build what they are building without them, regardless of which AI model wins the race. One stock from each bucket. Let's go. Nvidia. From the foundation bucket, Nvidia. And yes, I know everyone talks about Nvidia, but there is a number that actually matters right now. Analysts have an average price target around 298 on this stock. It's currently sitting well below that after this week's drop. Significant gap. Institutional money tends to close gaps like that over time. I want you to notice that is the entry strategy. I'm not buying all at once. I'm putting in 1/3 of my intended position now. Another third if it drops another 5%. Final third at -10. It's more just how you build a position properly. I watch institutional clients do exactly this during my time at Citibank, and the ones who bought in tranches were always more relaxed and more profitable than the ones who went all in on a single day. The second one, AMD. This is the one I'm most excited about this week, especially because it's dropped nearly 6% for no new fundamental reason. The business hasn't changed, that data center revenue is still growing 60% year over year. OpenAI and Meta are both deploying AMD chips in production right now, so the narrative AMD is just Nvidia's cheapest substitute is outdated now. Last year, AMD outperformed Nvidia actually, so the gap in AI training performance is real, but it's narrowing. A lot of that improvement isn't priced in yet. What about halal screen? Debt ratio under 1%, prohibited income under 1% of revenue. One of the cleanest balance sheets actually in the sector. Same 3-tier entry strategy here. Don't rush it. From the growth anchors, Arista Networks, ticker ANET. And this is one of the most people on this list have never heard of, which is exactly why I want to talk about it. Arista makes the networking hardware that connects everything inside an AI data center. Every server communicating with every other server at the speeds AI actually requires. That's what Arista builds. Zero depth, passes all 5 major Sharia screening standards, and unlike some of the high-profile names on this list, Arista's valuation, while not cheap, justifiable against its growth rate. This week's sell-off hit Arista too. Some story: nothing changed in the business. The market just sold the whole sector without much discrimination between the hype and substance. One thing I need you to hear before I close: one honest warning. Some stock on this list, ARM, are still expensive even after this pullback, trading at over 300 times earnings. So analysts who love the company are saying wait for a better entry rather than chase it here. So please don't watch this video and go buy everything tomorrow morning. Use the 3-tier entry, size your positions sensibly, and if any of these stocks aren't halal compliant with your specific screening criteria, trust your screen over my list. I'm sharing what I'm doing with my own money. Next video I'm going to the other side of this list, because while I was screening these 12 stocks, I also found the ones that look like AI plays but are quietly carrying debt levels that should concern any serious investors. Falling margins dressed up as growth stories. I'm calling it the danger zone. And if you are holding any AI stocks right now, you need to see it before the next leg of this correction hits. Subscribe so you catch it the moment it drops. And tell me below which bucket interests you most right now.